Good evening, everyone. I wish you a very happy Shiv Jayanti. It's a special day, and as an Indian, we should really remember this day because this was probably the greatest empire which was built in India, and in many ways, Shivaji Maharaj, he was a great first-generation entrepreneur. He also started from scratch. He had a vision. He had great strategies. His execution was impeccable, and he had this whole vision which people followed along with him. So it's a great, inspiring thing, and we celebrate this day. And I'm so happy that I'm with you guys on this day. Prachay Capital is a RBI registered NBFC. जैसे नॉन बैंकिंग हमारे यहाँ पे they tell us what not to do first. So non-banking is basically you cannot do banking. You can be a finance company. Now about our vision. Basically, our vision is to make India the biggest economy in the world by 2047, which would be the 100th year of our independence. Sometimes we really oversee some facts. As Bharat or as Indians, we are the oldest civilization in the world. And when you really realize India or Bharat has been the biggest economy in the world for major part of human history. I don't think so. Fifth is the position that India should be satisfied with, not even third. It should be the first. And it's not something nationalism. I'm just talking about basic economic principles. 1/6 of humanity lies in India. Right now, we are producing what? 3 to 4% of world output. Really, it's wrong to blame the government for everything that's wrong in the country. We as Indians should take up that, our per capita income is low because we are earning less. And there is really a scope. Again, if we just, increase our economy by 4 times, we'll at least equate the amount of population that, the amount of population that we have on the earth. So there is really the equilibrium. I think it would be achieved in periods to come. There's everything in this country. I think we are very talented people. We are running their companies for them. Most of the CEOs are Indians. So we are very talented. We are very brainy people. We understand things. Natural resources wise also the country is blessed. We have a lot of habitable land. We have a lot of resources. So there are a lot of things which are positive about India. Now, what is lacking is capital or finance. My connection with Mumbai is I started my career with Citibank. I was in financial institutions group for 1 year as a trainee, and then I was absorbed in Treasury Foreign Exchange. This was the period from 2007 to 9. So I started my career with Citibank. I was aspiring to be an investment banker. I applied at Goldman. I applied at Lehman. This was the period when the world was going through subprime. I was kind of clearing all the rounds with the partners. But ultimately, I could not get the offer because there was a global freeze and then Lehman went into bankruptcy. So this was the period when I was trying of, quitting job and get into practice or doing something on my own. So in this period, I studied finance and also I studied the US capital markets. तो ठीक है वहाँ से शुरुआत हुई and I was a first gen with no resources. I started. So 9 to 11, I was doing CA practice. I was teaching CA students. 11 to 14, I was working with under an ex-banker. I learned project finance. Then I was doing debt syndications. I helped my clients raise funds from banks and financial institutions. I worked with practically all the lenders, and we were working on the other side of the table where we were representing the clients and getting them funds from the banks. So we kind of understood the whole system which was there, how the companies should raise money, how the companies should use money, how they should repay these money. And we were managing this whole funds for them. So basically as an NBFC, what is our business model? Because, even I'm a person of credit. I take credit calls every day in my normal working day when I'm deciding whether to give money or not. And I believe there are 2 most important things to look at when you're looking at a company. One is the promoter. What is his vision? What is his professionalism? What is his approach? How systematic it is? How realistic it is? Then the second most important thing is the business model. So on the asset side, we are into corporate finance. So we help our clients, basically mid to large corporates, through corporate loans and corporate bonds. And the kind of money that we provide is growth finance. So companies who are right now mid, but who are ambitious enough and they would want to grow faster, who have sufficient vintage of operations, who have sufficient net assets, and who need money for growth, not for survival. So that is the kind of segment that we target. We do funding above 1 crore. The average portfolio is somewhere around 5.5, 6 crores because the portfolio runs down. We get repayments from escrow of cash flows. So on the asset side, we are into corporate finance. Interestingly, on the liability side, we are into wealth management. So normally NBFCs, they only focus on one side of the operations. We are equally balanced on the other side of operations, which is liability. And what we do here is we provide investors with high yielding fixed income investment opportunities. So instruments which give you regular cash flows, which give you a bit of higher return than the normal traditional debt options. So this is, I have coined a word for it, hi-fi. So basically, high yielding fixed income. I want it to be a bit popular. Are you owning hi-fi securities? So basically, if we look at the science of wealth creation, so it says that the first rule is, out of your income, put your savings aside first. Second thing is, it's not just about savings. You have to invest it. And your portfolio can have a balance of bullions. It can have a balance of real estate. And if you're investing into securities, it can have equity mutual fund. One asset class which is entirely missing from most of the portfolios and can occupy a significant position is bonds or the high-yielding fixed income securities. Some part of your portfolio should be invested into those securities which are giving you regular passive income. And I'm not talking about, very wealthy investors. I'm talking from a middle class perspective more, or as a society. You need some income to come regularly to you. You can plan some expenses based on those incomes. If you can probably manage to meet all your expenses from that income, then you become financially independent. Basically, the advantages of corporate bonds, I would just like to brief on that it will provide you diversification in your portfolio. If you're invested heavily in equity side, some allocation on the debt side would be healthier to your portfolio because of the correlation it helps. It provides regular cash flows, so you can allocate some kind of things that you want to do or some expenses that you want to meet, for which you don't want to touch your equity portfolio. You don't want to be dependent on your equity portfolio. There's a low volatility. The interest are fixed. It's truly passive. Every month you're getting some amount, but you don't have to stay invested. You don't need to acquire any special investing skills. What is the status of Indian corporate bond market? It is just 18% of the GDP. USA is 120%. China, it's 36%. Korea, it's 80%. The size of Indian corporate bond market is very shallow. One. Second thing being that 97% of the issuances are by only top 3 rated companies, AA, AAA minus and AAA. So only the top 3 rated companies are accessing money through public market, and because these companies have such a high rating, they will offer lower yield, which then becomes unattractive for a lot of other investors which otherwise might have invested. The third thing is 99.1% is through private placement. So it doesn't come to public at all. Why we came for public issuance was we already were handling a lot of money. And I believe banking is a business of not managing risk, but managing trust also. So we wanted to operate at the highest level of corporate governance, so that even during our early years, the systems are built in a manner where there is transparent reporting. So we want to break this exclusive club where the selected few are raising capital and the selected few are investing. We want to broaden the corporate bond market of India. And that's where, we would need your help. It's a very good way of investing. One, it allows our businesses to reduce their dependence on banks. They have an alternate way of raising money. Channelization of investment directly into business. So this is one thing which I normally, bring it up, that whatever business or whatever is happening in the secondary market is reaching the economy with a lot of time lag. Whereas this is a direct investment, directly your money is going into the business. Returns are one aspect of what your money can do for you. But the other aspect is कि यार हमारे इसमें बोलते हैं सुलक्ष्मी है क्या? मेरा पैसा जहाँ लग रहा है अगर उससे बिजनेस जनरेट हो रहा है, उससे अगर क्या कहते हैं जॉब्स जनरेट हो रही है, टैक्सेस बन रहे हैं, तो वो पैसे का ज़्यादा फायदा है. तो फ्रॉम अ इकोनॉमिक स्टैंड पॉइंट ऑल्सो this is very important that your investments are directly channelized into businesses. Liquidity will develop as the markets develop. These instruments are freely transferable. Debt recovery, transparency in debt recovery. This can be a big blessing to the Indian banking system. If the debt is defaulting, sell it at a discount and get away with it. Somebody else will recover. So a lot of things can happen if the lending is structured in the form of corporate debt, corporate bonds. The problems of multiple banking, consortium banking, the problems of takeover, everything can get simplified if we start doing more of corporate bonds. Now what Prachay has to offer in this public issue is 13% per annum return. I deliberately didn't again mention the annualized return. The annualized return is 13.8, but that's with a technical assumption of reinvestment at IRR. The minimum investment we have kept at 10,000 rupees. The tenure of the instrument is 5 years. We have an option of repaying after 1 year because based on liquidity which we can develop, we have applied for our own online bond platform. So we will try and provide liquidity in our own instrument. The special offer which I'll say for this particular issue which we have given 13%, we would like to lower our cost of capital eventually. So there would be a bit of demand also for this instrument, which we'll try and create. It's secured. The NCD holders would be sharing pari passu charge with our existing lender, which is State Bank of India, AU Small Finance Bank, and IOB. So you are at par with our existing lenders. So this is a big thing. Then there are institutions also along with you sharing the charge. It's not first or second, it's pari passu charge. Thing that we wanted to give our debenture holder that, you are also no less than our lenders in the books. So both are at equal stake. That's the kind of security that is built in. There is a third party referee appointed by SEBI, which is the debenture trustee. If you fail to get your interest, you can always complain them and, they can take the process forward, including taking us to insolvency. So there's no problem of, you taking up कि मेरे bonds का मेरे को क्या करना है. There's a third party referee taking care of your interest. We are rated BBB-. Then when I started my NBFC, 2017, banks kind of closed their door on smaller NBFCs. They said that we would not lend anything below AA. So credit rating has always been a challenge. The problem with credit rating is they want a particular scale to be achieved. They say that unless you are 1,000 crore company of AUM, will not make you enter the A club. My basic defense is I should be rated on the assets that I have and the liabilities that I have. Because if I'm able to have sufficient liquidity to honor my liabilities, and that is the exact reason of credit rating, right? कि 1 rupee 1 day default नहीं होना चाहिए. So why should scale be a matter in that? But of course, their systems are built in a manner in which if you don't have a particular scale, you don't get any good rating. And yeah, so basically, though our operations are profitable, our business model is highly scalable, and our growth plans are there, the company is professionally managed, and the numbers are good, we cannot get a better rating because we are of a smaller scale. So there's nothing wrong with the company per se. Yeah, they're under risk that the credit rating agencies, there are 3 risks which they identify. And as investors, I should make you aware of that. One is the account concentration risk. They say that for an NBFC of your size, you are into corporate finance. So the account concentration, the amount that is concentrated per account is a bit high. We tell them that, we have identified a business segment, and as we will grow, the account concentration will reduce. The company has plans to expand to 15 cities in the next 5 years. And if still it manages to keep the per account concentration below 25 crores, it's a good segment to operate. The second risk is industry concentration. 90% of our portfolio is in real estate. The mitigating factors for this is I have 15 years of experience in real estate. I have worked with practically all the lenders. I have understood how they evaluate proposals, and from there we have learned how to lend. One is that. The second thing is the industry is backed by hard and soft security. You will not get such securities because we like to do secured lending in any other industry. And if you can understand how the cash flows work in the industry. We have two approaches when we are doing business. One is we try and innovate. We try and find what is the kind of financial solution which is missing in the market and create a product for that. And the second aspect is we try and collaborate. So we find good players in each geography and in each industry, and then we connect with them, develop relationship, and offer them our services. It's not the other way around कि transactions आएगी और आप process करेंगे. Why we invest with us? We are RBI registered. We would be soon SEBI regulated. We have a strong track record. In 8 years of operation, we have not defaulted a single day on our liabilities. And in 8 years of operation, we have never had a single rupee loss on our assets. So that is the kind of tight operations that we've run. And we have a professional team. I've created the entire business model in a manner that I can manage it with the help of chartered accountants, company secretaries, and advocate. So these three professions can run my entire operations. So I've created systems according to that. Thank you, sir.